Welcome, everyone. If you're a Tesla investor, I'm guessing you've felt some serious whiplash lately. The stock has been on an absolute roller coaster, and it leaves you wondering, is now the time to go all in, or should we be hitting the brakes? If you've been holding on and seen some gains, congratulations. But now comes the hard part, right? What's next?
That's the key question. And the answer really depends on whether you see Tesla as a car company facing headwinds or a futuristic AI company just getting started.
I mean, just look at this. Up over 36% in the last 90 days. That's a huge run. It can give you some serious FOMO if you're on the sidelines, or maybe even make you a little nervous if you're already in. So, what on earth is behind this surge? Let's start with the good news. Okay, so for everyone feeling bullish, the future looks bright. What are the powerful forces pushing the stock up right now? Can you break down all of the good news for us? Well, the excitement is definitely palpable. And it's not just retail investors. We're hearing it from big names, too. For example, Raoul Pal, a really well-respected macro investor, just called Tesla's chart one of the strongest out there. What he means is that the stock's price movement itself is showing incredible strength, and that tends to attract a lot of attention. And believe me, he is not the only one. And you can see why. It's been a constant stream of good news. You had major analysts at places like Evercore and Wedbush raising their price targets in a big way. Wedbush is particularly focused on that AI and robotaxi potential. Then, boom, the Q3 delivery numbers came in and they beat expectations, which shows demand is still incredibly strong. It's like every piece of news is just adding more fuel to the fire. But here's what's really crucial to understand for the bulls. This is not just about selling cars anymore. They see Tesla's growth happening in 3 distinct stages, like a rocket. Stage 1, that's what we all know, dominating the electric vehicle market. But stages 2 and 3, that's where the story gets really, really big. It's about Tesla becoming an AI juggernaut, with robotaxis and eventually a leader in robotics with the Optimus bot. Okay, so let's talk about that AI and robotaxi idea. We hear about full self-driving all the time. What's the latest update, and why is it such a big deal?
The big signal recently was the release of FSD version 14.1. The fact that it includes a more aggressive driving style, nicknamed Mad Max mode, tells the market that Tesla is massively confident in the system. The ultimate goal here isn't just to help you drive, it's to create a completely unsupervised network of cars that can earn money for their owners.
And that leads to the real endgame here, the Cybercab. This isn't just a new model. The bull case is that it will be built with a totally new manufacturing process that slashes costs. Think about it. The potential here is to completely upend the idea of owning a car. Kind of like how smartphones changed everything about the phone industry. Some analysts are predicting this network could even start rolling out as early as 2026. Right. And all of this futuristic talk isn't just getting long-term investors excited. It's also creating a buzz among the technical traders who just look at charts. A veteran analyst like Peter Brandt has pointed to classic patterns, like something called a cup and handle, which to him signals a potential breakout. He believes the charts are pointing towards a price target of $480. For traders, that's a powerful signal. So, with all that, what are the pros on Wall Street saying? Are they all in agreement?
Well, that's where it gets interesting. It's actually pretty split. You can see that just over half of the analysts who cover the stock are bullish, with a buy or a strong buy rating. But look at the other side. A huge chunk are telling investors to hold or even sell. That division tells you there's a very different side to the story.
Okay, that makes sense. Because this all sounds almost too good to be true. It can't all be sunshine and rockets, right? What's the catch? What are the big risks that have almost half of Wall Street saying, hold on a second? I think the biggest thing I keep hearing is, sure, they're selling more cars, but aren't they making less money on each one? Is that the main concern?
That is the perfect question. You've hit on the absolute core of the bear argument. It all boils down to one word: profitability.
And here's the conflict in a nutshell. On one hand, yes, deliveries are up 7% from last year. That's solid growth. But to get that growth, especially with all the new competition, they've had to cut prices. And those price cuts are putting serious pressure on how much profit they make on every single car they sell. This leads us to the most important term for the upcoming earnings report: gross margin. Let me make it simple. If Tesla sells a car for, say, $50,000 and it costs them $40,000 in parts and factory labor, their gross profit is $10,000. The gross margin is that profit as a percentage. It's the cleanest way to see how profitable the actual car-making part of the business is, and right now, investors are watching it like a hawk. And this chart shows exactly why they're so worried. This is the forecast for earnings per share, or EPS, which is basically the company's bottom line profit. A year ago, it was over $1 per share. The estimate for this quarter, just 74 cents. That is a huge drop, and it's a direct result of that margin pressure we just talked about. And it's not just the margin issue. There's a whole list of other headwinds. Competition is getting incredibly tough, especially in China from companies like XPeng and Lyoto. Here in the US, a big $7,500 tax credit is ending, which could slow things down. Then you just have the overall economy. High interest rates make car loans more expensive. And you can't ignore the background noise, like governance concerns and the constant risk of supply chain problems. It's a lot to navigate. Wow, okay. So we have this incredible futuristic bull case on one side and some very real, right here, right now risks on the other. How does an everyday investor even begin to process all of this to decide what to do next? You have to decide which Tesla you're investing in. The bulls are buying into a futuristic AI and robotics company with almost unimaginable growth potential. The bears, on the other hand, see an auto company, a fantastic one, but still an auto company that's facing margin pressure, tough competition, and has a stock price that's already very, very high for a car maker. Which story you believe is the one that matters. And in the very near term, it all comes down to one single event, the earnings report on October 22nd. That's the moment of truth. We'll get real data, not just forecasts. What the company reports, and just as important, what they say about the future, will likely set the direction for the stock for the next few months. So as you get ready for that report, here's a simple checklist. Number 1, that all-important gross margin number. Does it come in above the 17 to 18% that Wall Street is expecting? 2, listen very carefully to management's tone. Do they sound confident or cautious? And finally, look for any real, concrete updates on those future growth stories, the Cybertruck and the robotaxi timeline. And that really leaves us with the million-dollar question, or in Tesla's case, the trillion-dollar question. With its massive valuation, how much of that incredible futuristic vision is already baked into today's stock price? Answering that one, well, that's your move. Thanks so much for breaking all that down for us. And for everyone listening, we hope this gives you a clearer picture. Make sure you subscribe to RichTogether TV for more deep dives like this. We'll see you next time.